going to watch to see. This, to me, is the groundbreaking level. All right. So what I mean by groundbreaking level, and this is a very important concept, groundbreaking level is this is the Great Wall of China. This is the brick wall that has, that's 10 feet wide, whatever you want to call it. This level is a psychological major level. In addition, I saw someone mentioning it in the comments as well, is that keep in mind, the rally on Bitcoin has been on light volume lately. That's a concern. What that tells me is it's not big money buying. Not big money buying. You have to be aware of that. And that's something that, again, gets my attention as well. So, again, we should know over the next few days, maybe over the next 5 to 7 days, Bitcoin again pulling back off of the initial pop on it. Take a look at the intraday chart. And here was your high from yesterday right here. And there's your high from today. Doesn't mean we won't take out that high. But remember, this is into a
Bitcoin finally pierced the 30K level, which didn't happen since June 2022, when it broke the support and started falling apart. As you can see, the market sentiment is on the green and greedy side, being at 65 at the moment we're recording this video, something that we haven't seen happening for months. Even though the level of excitement from retail traders is off the roof now, please bear in mind that over 98 million crypto derivatives positions have been liquidated since yesterday, as soon as Bitcoin pierced the 30,000 level, according to CoinGlass. This means people are now starting to short again, and this resistance may be stronger than ever. According to Gareth Soloway, founder and chief market strategist from InTheMoneyStocks.com and VerifiedInvestingCrypto.com, this is the groundbreaking level that may lead to the confirmation of a new bull market and that the lows are in for Bitcoin. In this video, Gareth will explain why he believes that and why you need to be careful with your positions so you don't get caught off in the hype. So please make sure to watch this video until the end. First, let's quickly look at the recent macro and CPI data news.
Take a look at the CPI data. What we basically see here is that consumer prices climbed 5% at an annual 5% pace in March. What does that mean? Well, that was actually a little bit better than expected. All right, so that's a little bit better. All right, the consumer price index increased 0.1% in March, according to the Labor Department, compared to 0.4% in February. All right, so again, what that's telling us is that inflation is slowing. The only negative to this report today, folks, was if you strip out food and energy, inflation actually increased. All right, it upticked. An annual growth rate pace ticked up from 5.5% to just 5.6%. So there was one little negative in that report that has me on slight amount of alert today. And again, here you have the 5.6% right here, which is where the number came in. And again, the market was expecting a 5.5% clip on inflation. Now, again, overall, I think this report was a slight positive. We are seeing the S&P futures rally to the upside. But for the most part, really what we want to do is we want to go into the charts and see what the charts are telling us. So right off the bat, take a look at this, guys. We see that yields are starting to come in just a little bit. Not a lot, but just a little bit. Now, I will be honest with you guys. I did pull the trigger on a short when we got this number and it popped dramatically to the upside. I shorted some QQQ as well as some SPY. Now, again, it's an intraday trade. I'm not necessarily looking to hold for a long period of time, but the concept here is this. If we bring up the Qs chart, and I want to go to the intraday chart, let's take a look at this real-time data. All right, initially, look at this pop to the upside. All right, I got my short off at 319.13. So I got my short off right here. I'm already in the money a little bit on that trade, according to my P&L, up about $11,000 and change. So I expect us to generally pull back down here, and I'm going to explain exactly why. So why the heck would I expect CPI to actually bring the markets back in check a little bit? Number one, we have PPI tomorrow. All right, so the producer price index is another inflation gauge tomorrow. Number two, Friday, we have JP Morgan, Citigroup, and Wells Fargo reporting earnings. Next week, a parade of tech earnings are going to start with Netflix next week. So I am looking to short into this rally. Okay, so essentially this bounce is a great bounce pre-market, but looking to short, I'll look to pick up some individual swing trade shorts on the back of this. I know that's counterintuitive to a lot of you guys. So many people out there are hook, line, and sinker, bull market back in crypto, bull market back in stocks, bull market back every which way. I'm here to bring some sanity to the otherwise insane world and tell you that that is not the case. It's not the case because of this mere fact. All right, the bottom line is we already know earnings are going to drop. If you look at the valuations on a Microsoft, on an Apple, they are trading at ridiculous valuations. Those two stocks alone make up a huge chunk of the S&P 500. That's going to bring valuations down. We already heard last month. In fact, we just had a downgrade on Microsoft. I believe it was yesterday based on their Azure growth. All right. So again, these things like that are going to bring the market back in. In addition, I still have it priced in that we're going to see a second half recession. So a lot of you guys probably saw that CPI number and you listened to CNBC and you're like, oh, it's a better than expected number. Holy cow, this is going to be the greatest thing for the markets. And then all of a sudden, markets are starting to fade here. Wait a minute, what's going on? I thought it was a good number. Remember, guys, you have so many things coming up over the next few days and next few weeks. Big money is not going to buy heavily into this number, especially when we've seen such a dramatic rise in the Qs. The NASDAQ 100 has gone from 285 to a recent high of 321. It's holding pre-market here, trading. What is it trading at? Let me see right here. 318 and change, or and even down to the 317s now, looks like, right in that vicinity. So again, yeah, 318.21 right now, pulling back just a little bit. Now it's still green on the day, but the question is, can it hold the green? Can it hold the green or not? Again, I am short the Qs. I'm short the S&P. Again, I got a tiny bit of my position short on NVIDIA there, only when it peaked above 275. Again, I like that even as a swing trade on the short side as well.
And this is why Gareth says this is the defining moment for Bitcoin.
Let's take a look at Bitcoin and look at this, guys. If you were here last week, we talked about this channel, this consolidation range. Where did I say Bitcoin could go? I said it could go to 30,500. What was the high yesterday? 30,500 and change. What are we doing today? We're holding basically flat on Bitcoin. All right, you guys know, if you know, I shorted some Bitcoin via buying BITI yesterday, nibbled a little bit on that, so far up on that trade. We're going to watch to see. This, to me, is the groundbreaking level. All right, so what I mean by groundbreaking level, and this is a very important concept, groundbreaking level is, this is the Great Wall of China. This is the brick wall that has, that's 10 feet wide, whatever you want to call it. This level is a psychological major level. In addition, I saw someone mentioning it in the comments as well, is that keep in mind, the rally on Bitcoin has been on light volume lately. That's a concern. What that tells me is it's not big money buying. Not big money buying. You have to be aware of that. And that's something that, again, gets my attention as well. So again, we should know over the next few days, maybe over the next 5 to 7 days, do we get above this level? Do we hold? In that case, then the low is in. All right. Now, it doesn't mean I'm going to go bullish and buy Bitcoin. That's ridiculous. You would never buy and chase a move like this. What it means is, if you get a confirmed bottom in on Bitcoin at 15,700, then on pullbacks, you start to buy more aggressively. At supports, you buy more aggressively. And that's the technique that, again, has made me the millions of dollars that I have made and I continue to make on a monthly, yearly basis in these markets, whether it's crypto, whether it's stocks, whether it's commodities. Bitcoin, again, pulling back off of the initial pop on it. Take a look at the intraday chart. And here was your high from yesterday right here. And there's your high from today. Doesn't mean we won't take out that high. But remember, this is into a major level of resistance.
Does this mean the lows are in, and we're not going to the 12 or 13,000 level Gareth said before?
Some of you guys asking, is it still priced in that Bitcoin could still go down to the 12 to 13,000 target, maybe even 9,000? The answer is, as long as we don't confirm and hold above 30,000, this 30,500 level right in this vicinity, the answer is yes. So again, that is still on the table. If we were to confirm and stay above there, then you have a different scenario where likely the 15.7 level, 15.6 level is a low pivot on the charts.
What about the US dollar index? Is it the reason behind the whole rally?
So this is why the markets rallied, and now this is why the markets are giving it back. So number one, if we look at the intraday chart, look at this. All right, look at the drop in the dollar on the intraday 10-minute chart when that data came out. All right, why did it come? Why did the dollar drop? Well, the concept here is super simple. If inflation is dropping, then it means the Fed has to hike less. That means it potentially can even cut rates in the future. That's weak for the US dollar. Okay? Okay? So again, that's the key on why it dropped. Now, why is it rallying up? Now, notice that the markets rallied when the dollar dropped, and now the markets are pulling back a little bit when the dollar's rallying. So the dollar's getting a bounce. Number one, it was a big sell, so you generally get a technical bounce. Number two, just like I said, remember, if you look behind the curtains, there, the CPI data actually upticked if you strip out core stuff, which is food and energy. So there's still some little signs of kind of higher inflation in the system when you remove that food and energy from the calculation. All right, so again, how does this go? We're going to find out, but if the dollar continues to rally, markets should continue to come in, and we'll watch and see how that plays.
What do you think? Is Bitcoin's bull run finally upon us? Let us know in the comments below, and if you want daily updates on Bitcoin and the crypto markets, please leave a like and subscribe. Thanks.